Greetings. Welcome to the Bitcoin Magazine podcast. I'm Dave.
And I'm Graham.
Today, we're talking with Max Keidun, CEO of HodlHodl, a peer-to-peer Bitcoin exchange that doesn't hold funds.
But first, let's take a quick look at the news.
The peer-to-peer Bitcoin marketplace, Paxful, is looking to expand adoption in Latin America, teaming up with Mexico-based money conversion service AirTm. Through the partnership, the two will allow users to buy and sell BTC from their Paxful accounts and use AirTM's payment methods. The partners say they hope to introduce Bitcoin to 300,000 new customers in the region, including places like Venezuela, where Bitcoin can offer a powerful alternative to the available fiat currency. But not all the recent news around peer-to-peer Bitcoin transactions has been positive. One of the largest exchanges in the world, LocalBitcoins, may not be considered peer-to-peer as previously thought.
Speaking of LocalBitcoins, they've ran into several legal difficulties over the last several months. Most recently, a U.S. citizen has been sentenced to fines and prison time for running unlicensed exchange services on LocalBitcoins. This marks a continued uptrend from the U.S. federal authorities in prosecuting Bitcoin traders. In April, the DOJ sentenced another trader to prison time and an $800,000 fine for similar charges. In both cases, LocalBitcoins.com was mentioned by the DOJ as the mechanism used by both defendants to advertise their service. At the end of May, the exchange withdrew all services from Iran to comply with U.S. sanctions. And at the beginning of June, several users have reported that LocalBitcoins no longer allows anonymous transactions.
A report published by the CME Group shows that last month was their Bitcoin futures product's most successful month since it launched in 2017. The report shows that the average daily volume was up 36% since April and 250% year over year. In total, 223 new trading accounts were added in May. CME's report is one more sign that legacy investors are easing into crypto. In addition to Fidelity's digital asset platform, which launched in March, and ICE's Bitcoin futures platform, BAC, which will test in July, NASDAQ and the crypto data provider CryptoCompare have partnered to release a cryptocurrency pricing product for institutional investors. So, big banks are coming.
In a feature roundup from Bitcoin Magazine's Colin Harper, a picture of Bitcoin's gradually increasing usability emerged. In it, he highlights some of the applications, services, and pieces of hardware that are now available to let users more easily participate in the Bitcoin network. Included in the roundup were hardware wallets from Ledger and Trezor, Casa's pre-synced Bitcoin nodes, coin tumbling service CoinJoin, and the BTC reward service Lolly.
If you followed some of the recent news around cryptocurrency exchanges, you might have noticed that the peer-to-peer Bitcoin exchange, LocalBitcoins, has had a wide array of legal difficulties over the last several months.
Breaking from its tradition for privacy, the peer-to-peer exchange has mandated customers to follow KYC standards.
In late May, LocalBitcoins announced it was completely withdrawing its services from Iran.
And with recent scrutiny and prosecution of unlicensed cryptocurrency exchanges by U.S. authorities, a business model pivot or withdrawal for U.S. customers seems imminent for LocalBitcoins.
With these changes in mind, many Bitcoin users are speculating over what alternatives they have for peer-to-peer cryptocurrency markets.
To understand the current regulatory atmosphere and opportunity for peer-to-peer exchanges, we sat down with Max Keidun, CEO of HodlHodl.
Hey Max, thanks for coming on the show.
Thanks for having me. It's a pleasure.
To start off, can you tell us about HodlHodl? How does it work?
We are peer-to-peer non-custodial exchange. To explain in like more easier way, we're in between LocalBitcoins and BISC. In that sense that we are web-based as LocalBitcoins, but we have non-custodial trades, and we have non-custodial infrastructure built in HodlHodl. So in that sense, we don't hold any funds, nor crypto nor fiat. Instead, and that's the main difference for HodlHodl from our main competitors, such as LocalBitcoins or Paxful. Each time the trade happening between buyer and seller, we create a unique multi-signature address on the Bitcoin's blockchain with 3 signatures, where 1 signature goes to the seller, 1 signature goes to the buyer, and 1 signature goes to the HodlHodl in case of dispute. So, and to release those funds from the escrow, you need actually 2 signatures. So you need to reach a consensus. So there's like game theory behind that, because you need to reach a consensus. And also, when the seller deposits Bitcoins into that escrow, he won't be able to return them back if he, for example, already receives the fiat from the buyer. And on the other hand, the buyer won't be able to get those coins without sending fiat. So you need to send fiat, you need to receive a confirmation, and then both of the parties involved in that contract, seller and the buyer, they sign the release transaction, and funds are locked out to wallet of the buyer. So basically all trades on HodlHodl happens through multi-signature addresses or through Bitcoin-based smart contracts, as you prefer to name it.
So the responsibility of every transaction falls on the user?
Of course, there's responsibility on the traders. So before you start, we always ask you to provide a proper wallet address where the coins should be deposited out of escrow. They should be returned out of escrow if, for example, you didn't receive the fiat. So in that case, we rely on our traders or on our consumers, because as we say in Bitcoin, we provide you tools to be your own bank, but nobody told you that being your own bank is easy. You need to do your own research, you need to educate yourself, and we provide tons of educational materials on HodlHodl, screencasts, guides, Bitcoin quiz, whatever. So before you trade, and we actually have a pretty solid UI, UX, so it's easy to use us. It's easy to understand. There's hints always hidden, so you can read what these lines mean, what this means, what is requested from you. So basically, we always provide you with support and help, so it's easy to use us. Actually, a lot of people using HodlHodl, they don't understand that they're not trading through our centralized storage, which we don't have. They're just trading through these multi-signature escrow accounts.
So HodlHodl is run by you and your team. So what's the difference between your exchange and some of the other more decentralized ones?
We are sort of mixed between centralized and decentralized. You might consider that having a team behind the project, CEO, CTO, and managers is part of the centralized history, or part of centralized characteristics of the project. But to be honest, I think that the main thing why we believe that we're not purely decentralized is that we have a servers, so we are web-based. That means that at some point, of course, as we see in Russia with LocalBitcoins, Russian official authorities restricted LocalBitcoins, but there still are people are using through VPN and Tor and all other stuff using LocalBitcoins. So I think we're centralized in that way, that we're web-based. Because if you compare with purely decentralized exchange, which is Bisq, it's a software. So you download it on your machine and you work from your machine. So the software cannot be shut down. But to be honest, even in decentralized projects, there's always a lead team behind any project. So it's, I think it's, in my opinion, it's nonsense to believe that there's no people or team of developers or team of decision makers within any even decentralized project, or the project that claims that it's decentralized. Because you always need, there are people who are making decisions or at least proposing something. I think that the only decentralized thing out there is BTC itself. So Bitcoin is decentralized. But if we speak about the project development, doubt that it will be able at some point.
LocalBitcoins has pulled out of Iran, and HodlHodl recently announced that they would welcome those Iranian traders with Farsi translation and a discounted exchange rate. Did your team foresee this happening, or was it more of a reactionary measure?
Well, actually, we expected, and one of the reasons why we started HodlHodl, that we understood that due to the fact that on LocalBitcoins you trade through their wallet, so basically they process your crypto, we expected that at some point they will be forced to imply KYC/AML on their users, and this will lead to some consequences. In terms of Iranians, no, we didn't expect that, although we have a foresee translation already for a month or even more. But it was added like just one of the languages that we have. We have Russian, for example, we have Thai language, we have Japanese language on HodlHodl, just one of the languages. So we didn't expect that they will shut down the service for Iranians. As to regarding the Iran and this case with LocalBitcoins, what we wanted always to point out that we actually would like to serve the regular people, not governments or institutions. And Iranians are very interested in Bitcoin and curious and are willing to learn more about, and they deserve, in our opinion, they deserve quality, non-custodial and safe services like ours. Also, so far, we believe that we're strictly within the framework of law in all of the countries we are operating in. So our main goal with HodlHodl initially was to help people in countries such as Iran or Venezuela, well, you name it, to achieve more individual freedom by being able to use Bitcoin. So we didn't expect that, but we reacted quite successfully to that story. So yeah, and I think so far it went well.
Do you know much about the Bitcoin landscape in Iran?
We actually have the person who was translating HodlHodl to Farsi language or to Persian language. He was advising us to some extent. So we are not familiar with that. And to be honest, we still yet to see any trades happening on HodlHodl with Iran. But we are going to learn that.
Where do you see them as viable use cases for Bitcoin in places like Iran?
I think that there are many use cases for Bitcoin, but now, unfortunately, to say at least, we see that in some countries, actually, the main use case of Bitcoin is survival. If you will see at Venezuela, the use case of Bitcoin in Venezuela is basically providing tools for people to survive, where you have government printed currency, which is inflating at the rate like several thousands per year. And on the other hand, you have Bitcoin, and basically it's only a tool to survive. So I think that a part of saying this regular stuff like providing financial freedom, etc., I think it's the use case is to bank unbanked and to help people in maybe less developed countries to catch the wave of new financial phenomenon or new financial revolution that Bitcoin provides. So I think that's the use case of Bitcoin, becoming the global currency for anyone.
How do you see Bitcoin regulations shaping up in Iran and other countries with heavy sanctions?
I don't know, to be honest, because there's. I will give you an example of Russia, the market that we're familiar more with. Russia is under sanctions already, for how much? For 3-4 years, and it would be logical to embrace Bitcoin or crypto in general because it will help you to avoid sanctions. Yet. They're only about to introduce a proper regulation, and we don't know what will be the regulation, crypto regulation in Russia. We just can guess whether it will be positive or whether it will be negative, etc., etc. So I think it's up to government of that country to decide. But as I mentioned previously, Bitcoin and HodlHodl goal is to serve regular people, not governments or not institutions. So I don't know. I hope that there will be more and more governments that will actually embrace Bitcoin and will understand the value proposition of Bitcoin. But we will see.
So I'm thinking of the new international standards for exchanges that will soon come out from the Financial Action Task Force. What would tighter regulatory requirements mean for HodlHodl?
Well, if we will, for example, we don't operate in US. We can touch on this later, but it's actually worth looking at the latest SAC or Security Exchange Commission regulation that actually categorize non-custodial wallet providers, which we can be and which we are as HodlHodl, as exempt from money transmitter licenses and regulations. So we are actually non-custodial service by design, and it is impossible for us to send the Bitcoins locked in escrow by our users anywhere because the users hold the private key necessary to sign transaction, as I mentioned and as I described previously. We don't consider ourselves a centralized exchange. Again, we might be considered a centralized service with decentralized storage. So we don't touch crypto. We don't process it. We don't have any wallets. We don't take crypto from Alice and send it to Bob. We don't do that. They work peer-to-peer purely. So for us, regulations that implies on the centralized exchanges is a regulation that basically implies on the centralized exchanges because we aren't a centralized exchange. We are exchange with decentralized storage, peer-to-peer, non-custodial. So I don't know how it will work out. Maybe it will create an flow of customers from centralized services to decentralized services. Who knows? But there's like huge difference between centralized exchanges and decentralized exchanges in that sense that centralized exchanges are used mostly by day traders who require the frequency of trading, while decentralized options are mostly used by either these are OTC traders who trade large volumes, and if your decentralized exchange is secure enough that they will use your escrow services, or it's people who are just willing to acquire one BTC or like fraction of BTC, or they want to sell without any additional like burden and without sending any additional to like third party.
Because HodlHodl doesn't hold users' wallets, does it also mitigate some of the risks in large-scale hacks?
Yeah, because we don't hold any funds, and again, as I mentioned, we each time the trade's open, we just create a multi-sig address on the public Bitcoins blockchain. And so even if HodlHodl is hacked, the hacker will be able to get only one key out of 3. And to release coins from the escrow, usually there are like many escrow because many trades are happening in the same time. So you need 2 keys actually to each escrow, 2 unique keys to each escrow, not like 2 keys that open up all the escrow accounts. So in that sense, why HodlHodl is quite popular among OTC traders, because in these trades we serve as an escrow agent. So they use our technical solution to trade because they believe that this technical solution provide better security as they will trade with any third party, and they must deposit like huge amount of BTC and trust some kind of third party without even knowing their security procedures or all that stuff. So in that case, you just trade through the multi-sig escrow address. The system is built in that way that you don't need to trust us or you don't need to trust your peer. You just deposit these coins and you wait for fiat payment to arrive to your banking account or any account that you provide within the payment method that you choose.
Back to the reason why I can't actually use HodlHodl. Why aren't you guys in the US?
For us, it's a legal risk to operate within US. Although, as I mentioned, like the latest regulation from Security Exchange Commission stated that all non-custodial wallet providers are exempt from money transmitter licensing regulation. But at the moment, we actually open up our testnet for US citizens and people with US APIs. So you can go to the testnet of HodlHodl, especially on our Lightning-powered testnet, and try. And we're actually considering of returning back to US. And now we are discussing this with the team of legal experts, because the funny thing is that although you won't be able to use HodlHodl, you can still enter the website and you can still check it out. And the most popular actually country that visited HodlHodl during the course of our project is actually US. So we see like 30% of visitors are coming from US to HodlHodl. So, and brand is well recognized within US crypto community as well. So we are considering to return to US, maybe with some other interesting developments that will allow us to mitigate the risks, the legal risks. And so, yeah, we hope that we will have some good news for our US followers, US-based followers, and people that like us in upcoming months.
At the beginning of May, HodlHodl launched Lightning Network-enabled payments on its testnet. When is that going to be live for users?
So it's 3rd of June, we will launch Lightning-powered trades on Mainnet. So you, not you because you are based in US, but all other people will be able to start trading through Lightning on HodlHodl. Why we did that? Because we really believe in the potential of this technology, first of all, and we want to provide our customers not only with secure peer-to-peer trades, but also with fast and cheap peer-to-peer trades. So Lightning will allow us to do that. So we will have, from 3rd of June, we will have 2 modes on HodlHodl. One will be the regular mode, trading through multi-signature addresses. And another one will be Lightning mode, where you will be able to trade from your Lightning wallet and receive coins to your Lightning wallet.
Because the Lightning Network is so new, I've heard people comment on how it could have liquidity problems right out of the gate. Since you're the first peer-to-peer exchange enabling Lightning payments, could you sort of explain potential liquidity problems?
Well, as this technology is quite young, and even Lightning developers, they say that you shouldn't risk with big amounts. So there will be and Lightning, to be honest, is yet to become consumer friendly. Mm-hmm. Well, crypto is yet to become consumer friendly in general, and Lightning especially is yet to become. It's a powerful technology, but it's still developing. Not only in terms of security, and not only in terms of adoption within the crypto community, but also in terms of providing a proper UI UX for general customers. So in that sense, the liquidity will be problem, because it will be most probably it will be Lightning will be used by the crypto community, and by even not by everyone within the crypto community yet, because we see that it needs some time to actually launch properly and to start working properly. As for liquidity problems for any peer-to-peer exchange, well, of course, there's a problem with liquidity for basically a lot of peer-to-peer exchanges. And for HodlHodl, it's always been a problem. Why? Because we are still quite young. We launched in the February 2018. So it's 1 year and 3 months since our launch. And We didn't invest anything in marketing because we truly believe that if your product is a proper product, then in most use cases you will be well known, you will be respected, and people will come by recommendation or by word of mouth to your platform. And we actually see that after 1 year of hard work, we see that now amount of users onboarding with HodlHodl is actually increasing quite significantly. So now for any peer-to-peer exchange, liquidity is a problem, because if you have a centralized exchange, you can basically find an investor who will fund your liquidity pool within this exchange. And if you have a peer-to-peer exchange, you need to find like enormous amount of sellers and match them with enormous amount of buyers from the other sides, which is hard.
Max, how did you even get into Bitcoin?
I was actually working in private banking and as a wealth manager. So I'm like for 10 years, I had a career in banking. I've been introduced to Bitcoin by one of my clients in 2013. And it's at that point I actually thought that the guy was literally crazy, because he was like saying that like in few years that there will be no need for any middleman. I will be able to send like millions of money to my friends in Brazil or anywhere in the world without paying any enormous fees, without going through any KYC/AML procedures, and without any burden that it might arrive in few days, not like just the same day. So I thought, well, it's funny, but he's not serious about that. And but at that point, I started to research the topic. And actually, in 2015, he invited me to join his team, his project, which was a Bitcoin project. And yeah, so since 2015, I'm in crypto. And actually, one of the reasons was not only his invitation, but also at some point sitting in my office in the bank, I understood that there's actually might be a possibility that there will be no need for a middleman in the future. So I thought, what I'm doing here, because I'm the middleman. And so I went out of the banks and joined the crypto.
Okay, tell us about the prediction product you guys are launching.
So we're kind of making an announcement here. So the prediction is basically a non-custodial Bitcoin peer-to-peer prediction market. So again, we use the same technology that we use within HodlHodl, multi-signature escrow addresses. So you will be able to come to our prediction market. You will be able to create prediction. Let's say you will create a prediction that price of Bitcoin on the 1st of June on Coinbase exchange at, 10 a.m. Pacific time will be higher than 10,000. You will publish this offer or this prediction on our platform. And for example, me, I will go to that platform. I will see your prediction and I will disagree with that. And each one of us will lock in the amount of BTC that is requested by original offer. So you would say, I can literally bet 0.5 BTC on that prediction. And I will say, okay, I will make the same amount of BTC. We'll put in that contract and we will see who's right, who's wrong. And at 1st of June, when we will see the price, whether it's bigger than 10,000 on Coinbase or it's lower than 10,000, the winner will take it all.
How's it different from Augur?
Well, first of all, we are based on Bitcoin. That's the first one. That's, I think, one of the core differences.
Yeah.
Second of all, we don't try to decentralize oracles, what Augur is trying to do. So we will still have a multi-signature escrow where you will deposit BTC, I will deposit BTC, and each one of us will have a key to this escrow. And of course, prediction platform, HodlHodl's prediction platform will have a key. So in case of the dispute, when you will say, I disagree, and I will say, I disagree, HodlHodl prediction oracle will came into that dispute, and they would solve either in one direction or in another direction. So we are not trying to decentralize oracle. And also our prediction market is purely peer-to-peer. So basically it's a prediction between two parties. It's not a prediction between like 100 people from one side and 100 people from different side that actually like, which sometimes affects the odds, and sometimes it's affect the stakes that are out there. So it's actually like pretty interesting tool, and there's nothing similar in Bitcoin, and we believe that there's nothing similar in crypto in general. Oh, and of course, we didn't make any ICO to fund our project, so which is like one of the main advantages, because ICO is always a legal threat. It's always a problem, and we've built that purely based on our resources that we have.
So the oracle validates the winners and losers of any given prediction. Will that oracle be an AI or a human?
No, it will be a person. It is a person, actually. It's our support. That's why we state on our prediction market that your prediction should be precise, and you should correctly state that, for example, if we return back to that use case of Bitcoin price prediction, you should state the precise currency, the precise exchange, the precise price that you believe will be like, Bitcoin price will go bigger than, 10,000, or it will be smaller than 10,000, and the precise date and time, so that we have like solid prediction contract based on the facts, which we can double check, because the price of BTC on any particular exchange, you always can double check that. And of course, due to that fact, we will also have a pre-moderated some of our offers and some of your predictions that you will publish in our prediction platform will be pre-moderated, and we will see how people actually formulate these predictions, because you don't want to appear in a dispute where one party says, I predicted that there will be snow in New York, and another party says, well, in my part of New York there's no snow, so I won. And another party will say, well, in my part of New York there is snow, so I won. So we are going to avoid this imprecise and to say for us unlogical predictions. So we want to people to predict like some factual things that can be easily verified.
Max, are you going to make any predictions?
Of course, I'm going to make a prediction. You will be also able to, for example, to predict an outcome of sports games. So I'm a big fan of Chelsea Football Club, and most probably I will have some predictions on their games next year, because this year the season is over in Premier League. And I will also like predict some of price movements. Of course, I will do that. You can basically hedge your risks also with predictions. Like, for example, if you have a long position in BTC, but you still think that there is a probability that Bitcoin will like enter the bear market or the price will decrease, you can always put a prediction on our market. And by that you will be able partially hedging the risks, like for example putting a prediction that Bitcoin price will fall.
I hope not. Anyway, thanks for talking to us, Max. Really enjoyed it.
Cool. I really enjoyed that.
The Bitcoin Magazine podcast is a BTC media produced podcast on the Let's Talk Bitcoin network. Today's episode was produced and edited by myself and Dave. Stories this episode come from articles written by Bitcoin Magazine staff, including Peter Chihuahua, Colin Harper, Jimmy Akee, Landon Manning, and Aaron Van Weerden. Theme music provided by Billy Sly from the Crypto Cantina. Special thanks to our guest Max Keidun, and of course Satoshi Nakamoto. We are eternally grateful. Visit bitcoinmagazine.com for more in-depth news, analysis, and resources about the most successful peer-to-peer currency. And make sure to follow us on Twitter at Bitcoin Magazine. You can find more engaging crypto podcasts over at letstalkbitcoin.com. You can follow them on Twitter at the LTB Network for all the latest episodes. Be sure to subscribe to the show on the Apple Podcast app, Spotify, or wherever else you get your podcast. And if you got the time, please leave us a review. You know how much it helps. Thanks again for tuning in, guys. We'll see you next time. And until then, hodl on.